Everyone talks about tax-free setup like it's the ultimate goal. No taxes, more profit, complete freedom. It's the perfect plan. But here's the reality. Most people chasing tax-free structures don't know what it exactly means. And most importantly, they don't know what it doesn't mean. I have seen entrepreneurs making decisions without having the complete knowledge or information, which has costed them more in the long run. So in this video, I am going to break down the truth behind tax-free setups. Let's start with why it matters. Just because the country has 0% corporate tax does not mean you pay zero tax personally. Your tax situations depend on multiple factors: where you live, your residency status, and how your income is structured. So if you set up a company in a tax-free jurisdiction without knowing these layers, you might be taxable in a different place. Or worse, you could create compliance issues. If you're currently exploring tax-friendly setups or jurisdiction, you can book a call with me with the link which is mentioned below. Now let me break this down into practical insights. This is the biggest misconception. You might open a company in a 0% tax jurisdiction, but if you live in a country where it is globally taxed, then you might be liable for paying taxes. So your personal residency matters more than the company location. Many countries now require economic substances. That means your business has to show real activity like operations, decision making, or presence in the country where it's registered. If not, authorities can question your structure. This is where many paper setups fail. Even if your company is incorporated in a tax-free jurisdiction, banks have strict checks. If your structure doesn't make sense, or if it looks like you're trying to avoid transparency, your bank account can be flagged or even closed. Smart entrepreneurs don't chase zero tax. They focus on optimizing their structure legally. This could mean reducing tax exposure, using multiple jurisdictions, aligning residency with business structure. The goal is efficiency and compliance, not shortcuts. What worked 3 years ago might not work today. Global regulations are becoming strict, especially around offshore setups. So copying outdated structures or information from the internet can put you at risk. Let me highlight few common mistakes. Believing in one setup solves everything. That's wrong. There is no one size fits all structure. Second, ignoring personal tax residency. This is where most entrepreneurs get it wrong. Third, setting up a company without thinking about banking. A structure is useless if you cannot operate it. Fourth, working with providers who only help you set up the company and not structure the company. That's how many new entrepreneurs end up with non-compliant or unusable setups. So here's the truth. Tax-free does not actually mean what most people think of. It's also not about escaping the taxes completely. It's about structuring your business and your residency so that you can stay compliant as well as legal. Not only that, when you structure your company correctly, you can be efficient as well as sustainable. When you're setting up a company, and if you don't structure it correctly, in the future, you can have a lot of obstacles or authorities can be behind you. If you're a serious business owner and want to structure your company, you can book a consultation call with the link below, and I can help you guide step by step according to your business requirement as well as your residency. Hope you like this video. Make sure to subscribe to this channel and don't forget to share this video with an entrepreneur friend of yours. I'll see you on the next one.